This is a very special chat we are having today with two veterans of the market, veterans of financial services sector and pioneers in their own way in development of the stock markets of India in the last couple of decades. We have Mr. Raamdeo Agarawal and Mr. Motilal Oswal joining us today on this very special chat. Mr. Motilal, today I will start with you because you appear rarely on the business channels. Let's talk about your business first. The two largest contributors of the business, your asset management and broking, both of them are witnessing headwinds in their own ways right now. One relatively more cyclical and the other, of course, the industry overall is shrinking. What's the way forward before we talk about other segments of the business, in these two at least?
See, what you're saying is sinking. It is not the case actually. Even on the quarter-on-quarter or year-on-year, I think that both the businesses are doing very well. Historically, both the businesses actually revenues and profits are at all-time high. And if you look at the growth also, the AMC business obviously has the highest growth, about 60% profits. Broking would have more than 50% profit, even quarterly profits we just declared yesterday. So in my mind, I don't think so that there's any kind of stagnation or any kind of slowdown so far.
Right. So the other big problem area for the valuation of the overall company, and of course people who follow shareholders as well and people who follow your company, has been the home finance end of the business. Talk to us, sir, what is the situation right now? What have you analyzed? What went wrong over there? Before we come about the steps you're taking to plug that.
You have to go through a learning curve for any business. So we as a promoter never had any experience in terms of any lending business. So we created a very experienced team, and the team in its own wisdom, they didn't really, I think, do the right things in terms of putting the right kind of people, right kind of organization structure. Like two flaws were there looking back. One was that credit being managed by the sales. The branch credit manager was reporting to the branch manager, which is a fundamentally flaw looking at the kind of, I think, industry practice, best practices. Second thing is that we never created a collection vertical, because in lending organization, you need to actually, you are a more collection organization rather than lending organization, because lending is easy, but the money is made when you collect the money, right? So these two things really, these are the two big learnings which really now we have set it right. The structure is vertical now. The whole 350 people collections teams working 24/7, they are in ready. The complete structure, we have added a lot of new kind of, I think, people like RCU, risk containment unit was not there. Technical teams were more outsourced. So we actually believed in the vendors certificates, which really many of the vendors actually they didn't give the right kind of valuations. So these are few learnings.
So what is, where do we stand right now in terms of financial damage because of those decisions or business decisions which were taken and Aspire went on, and how much more quarters would you see where some repair work can actually happen with the
let me tell you that March, coming March, that is March 19, really I think we will have complete cleanup of the books. The books will start shaping up. The sales, we must have seen the sales kind of growth again back. So March 19 will be far better than March 18. I think next couple of quarters will be able to now contain all the kind of, I think, issues and go full force on the sales side also.
So what is the plan now? You must have reworked your plan when you started off versus what happened in now. We understand that the NPA levels have gone down from 8% to 6.5%, and you are on road to provide for slightly more. What's the new targets which you have set yourself in more conservative manner after taking care of these gaps?
So targets in terms of sales, or
loan book
and credit risk. I think sales, we actually when we came to really understand the situation, the first thing we said that at least let's shut the sales engine. We didn't shut it, we slowed down drastically, so that we understand what is the size of the problem. Now for last 6 months we have slowly restarted the sales engine, and I said that March 19 second half will be far better than the first half.
Right. Let's talk about the asset management end of the business. That is in focus right now because some of your competitors are, more and more competitors and industry peers are getting listed. Do you have, similar plans as well? Are you working your numbers? Any ideas which are coming to your mind to go ahead and list it?
I think there are a lot of plans, but better Raamdeo take care of the AMC business, so maybe he can respond.
Raamdeo, you saw the subscription which came in and of course the pedigree. What are your own plans at HDFC AMC?
No, no.
At Motilal
MOMC.
AMC.
Yeah. So MOMC is doing well. It is one of the fastest growing AMC, probably the fastest growing AMC, and it's the only equity only AMC. So it's somewhat different in purpose and commitment, and it goes with the overall ethos of the organization, where Motilal Oswal is a, I would say, equity powerhouse kind of thing. We think equity, live equity, drink equity, so the entire risk. I mean, our 100% of personal net worth of Moti and mine and 100% net worth of the company is fully committed to equities. So that's the kind of culture we have, and it's a brilliant opportunity to, I mean, what we have seen in the last 30, 40 years. I mean, I'm in the market, this company itself is 30 years old. What we have seen, what equity can do, I think next 30 years will be, I mean, multiple times more exciting for equities. Those who have the courage and who have the guts to take the equity on their side. I mean, people call it equity risk. I don't call it equity risk. It's fun of equity. Sure. So those who can kind of manage it. And we have, over a period of time, we have weathered all the storms of whether it is a Harsha Mehta bull run, whether it is a Y2K in 2000, or whether it is 2007 storm of global equity collapse. We have seen all of it, and this company has survived and prospered from every this thing. So, I mean, those challenges will come in bigger way, but we know how to get over it, and hence the build-up in asset management, which is basically managing equities, is going to be. And my sense is that growing this equity business or AMC business at about 25% for next 10 years. I mean, beyond that, who knows? 10 years itself is long enough. So that is 10x in 10 years at 25, 26%. That's the kind of opportunity I see. For individual entrepreneurs, it could be much bigger than if you are starting a small base. I think the opportunity could be bigger.
So are you witnessing that people have called equities and mutual fund business cyclical for last several years and decades? Do you think that element of cyclicality is relatively coming down, and with financialization and demonetization tailwinds now, flows are becoming much more secular and structural?
Nature of the businesses don't change, and the AMC businesses, yeah, I mean, it is not a complete transactional business, but you have a stock. So it's an AUM business. So like banking, in banking you have the loan book or say deposit book. What is the asset base of the bank? Like that asset base of AMCs. So even in bad time, we will have, say right now we have 40,000 crores, tomorrow market goes down by 10%. Still I have 35, 37,000 crores. So the businesses do go through some kind of impact by the market cycle. So markets will, I mean, you're not saying that markets are going to be absolutely flat. Markets will have its rhythm of going up and down. When it goes up, mark to market gains will be very high. When it goes down, it will bring cyclicality, and mark to market will be down. Though it will be countered by the gross inflow. But unfortunately what happens is, when markets go down, even flows are negative. So it is compounded. So the cyclicality becomes severe when the market corrects by 25-30%, and the flow is also somewhat negative.
Raamdeo, Motilalji, it's so nice to see you together today and having this chat. Also, I would like to bring up a point which is, people are whispering in the market about that there seem to be some amount of differences which have come up the way both of you are running the company in decisions, investing related business which is handled by you, running of the company which is handled by you. Would you like to once and for all clarify and kill those whispers and rumors which are happening in the market? That differences have existed now, have come up now between the way companies being run?
I'll tell you one more incident. I mean, market has to find something more exciting. I mean, they have to keep doing it. So in 2004 or 5, we had one rumor going that this company is sold to Sahara or something. The deal is done, and so in fact I asked one of my employees, what do you think of this rumor going on? He said, sir, how do we know what's happening in the boardroom? Then we had to hire a quarter page of Economic Times and say that, sir, there is nothing. This company is completely as it is, where it is, and run by two of us. So that was the kind of rumor once I remember 2004 or 2005. So I mean, I think again this is a figment of somebody's imagination that they think like that. Which is very sad, but
Motilalji, what do you think would have triggered this kind of even talk happening in the market? Just because one segment of the business did not work out exactly the way you had planned, perhaps with hiccups, it will come back?
See, two things. First is I have been hearing this kind of rumors for last 20 years. Every 2-3 years, somebody will say that, oh, is there any kind of issue between the promoters and all that kind of stuff, and every time they are proved wrong. So there is absolutely not a kind of iota in that kind of rumor, and in fact, to come from a very respected national paper itself shows about that how they have gone wrong on making this kind of I would say rumors, or they have been part of this rumor. But that's fine. I think we are doing our business the way we were doing say 30 years back, and I can say from my side that it's not going to happen, at least in my lifetime, that we will split. The relationship is so strong and prospering. Now coming back to the business, there will be always, we have seen many ups and downs in the market cycles.
No, actually we wish the same for you. We've seen you for almost over a decade together.
See, if you look at the size of the company, Aspire is really not even 1/5. So why Aspire should drag the whole kind of MOFSL culture or MOFSL?
But sir, we did see that even the valuation of the overall company had halved. When this particular Aspire issue came up at the peak, and now of course it's coming back as people are understanding. How confident are you that this part of the business will come back to normalcy and gallop ahead, say in the next 2-3 quarters?
No, I am very confident. In fact, personally I spend 80% of my time to make sure that this ship come on kind of in proper shape. In fact, I have shifted my own office to Aspire
from the 11th floor. Yeah.
So that's not an issue. I think I am very confident that we will be able to bring back the growth. Of course, when the size of the business is huge, it takes time for you to control certain situations, or for you to understand, even when you are completely new and you left it to the professionals, for you to understand the ground realities, the problem size. It took some time, but now we know what exactly the problem is. The whole team, the old team has left, or they have been asked to go. In fact, CEO has just resigned last week, and new search for the CEO is on. So till we find a competent CEO, I think we'll keep on driving it with full force. We have built a lot of businesses, and every business took time. Agree with me? So it takes time to build a business and to bring up certain size. But look at the opportunity. Housing finance is a much larger opportunity than even, I would say, asset management or broking.
Raamdeo ji,
just to see, whatever we are seeing in Aspire, it's not that it was not thought through. See, you are frozen when something happens which you never thought through. Even before laying the foundation for this, we were aware of this challenge. Okay, and that's why, as I was telling you, there's always 2-3 levels of recourse in this. It's a collateralized lending, properly collateralized lending with huge margin of safety. You give 65 rupees for 100 rupees house, and still this country can buy all the houses whatever we have, some 40,000-50,000 houses. Of that, just about 7-8% are stressed. It's not that it's gone, it is still collateralized. So, I mean, this is how you learn the entire game of making money in the businesses. Everybody else is doing well in this segment. We have our own challenge little bit, because probably we grew a little faster. But it's not that this risk is not known ever. It was always known, even before when it was small. So,
and your size of the balance sheet.
Yeah, so when the risk becomes real, now the trick is how well you negotiate this and cross this hump. And then, because these learnings will allow you not to create any more mistakes the next round. That's how business learnings happen, which is what we are going through. It's a normal process. And market is right. Market is right one day to say that they are rocketing, 100% growth every year, and hence this is X valuation, Y valuation. That's how the markets work. When it is not doing that well, then market has to, first thing is take it back, whatever valuation they have given, and then they'll say, okay, buy. जैसे जैसे बनेगा ऐसे से हम valuation देंगे. So right now, since it is at a flat or kind of a still investment phase, I think market will watch from outside, and then as and when it is ready, then again they will look at down or look it up.
So you're talking of the segment of the business, your AMC business, one segment PMS, which is largest in the country now. How is the competitive landscape there? Because every now and then we are seeing more and more players joining the PMS side, and Ultra HNIs are now seeing PMS as a serious area of interest compared to vanilla mutual funds. What do you see, how you analyze the landscape, and what do you see the growth of PMS industry?
See, PMS or even mutual fund, I would say, it is not about winner takes it all. You cannot manage all the money. I am telling you, by 2028, it will be 100 lakh crore industry. Anywhere between 75 to 100 lakh crore industry. Could be even bigger. Now, in that situation, how much can I manage? I cannot manage maybe at that time more than a lakh or 2 lakh crores and all. See, because this is one business which is anti-scale. As you become larger, your performance goes down. So this is not a business where like many business like broking. I can do today, if I am doing $1 billion turnover, I can do $100 billion without impacting anything. It's only execution. There is nothing, there is no obligation on me to perform. But here in asset management, there is an obligation to perform. So at some level you can perform very well. Very small is also not good. There is some optimum scale. We don't know that what is the optimum scale, but you cannot manage unlimited. So there is enough capital on the street today. There is enough. I mean, if I can manage 1 lakh crore, there is 1 lakh crore for me. Maybe not today, in next 5 years. So my challenge now is not about how to get more money. My challenge is actually to take care of what money I have and do a damn good job of what money is there. And that's what eats me. That
sure.
How do I convert my competence or whatever little we know about equity to give better return to all the investors who are with me.
Sure. In fact, on that wonderful note, we'll take a short break. On the other side of the break, not only will we grill you on what the market looks like going forward and how are you analyzing the landscape, but also how difficult it is to invest in this kind of an environment and some of the calls which may not have panned out the way you had planned it earlier. Time for a very short break. Welcome back. Still watching the special telecast with Raamdeo Agarawal and Motilal Oswal of Motilal Oswal Group. Raamdeo ji, let's start by talking about another slightly niggling area which Street is talking about. In the last couple of months, some of the calls from your house have really not gone down, not only not so well, but have turned out to be big accidents. Talk of Manpasand, PC Jewellers, Indigo. What is your reaction to the way things panned out?
See, one is that we can do one by one, but see, whether it is in research or investing, you do with best effort, looking forward, looking into the future, and you are bound to go wrong in some of the calls. Okay, and you can appraise me looking backward.
Sure.
Sir, you bought Indigo. I still think Indigo is one of the finest, enterprise which the country has created in last decade. In last decade, I think this is unparalleled what they have created as an organization. Now, creation of a company or enterprise is one thing, but creating as an investment machine is yet another. So and we are more concerned as an investment machine. So it's not that the company is broken down or finished or anything like that, but we have not made a lot of money out of that. Okay, and the challenges has been the oil prices, challenges has been their new engines, and challenges have been the new entrants which have come and kind of.
But you are sticking with your call on Indigo, or have you pared down?
No, we have pared down. I mean, earlier we had 8-9%, we might be having 2-3%, but clearly. That also is lack of our understanding of the inherent challenges of the industry and the India's paying power for the tickets. See, when the oil prices go up, literally 60, 70, 80% in 12 months, and yet you want 20% growth in the passenger, how do you do it? Either you can increase the ticket price and get the passenger flow lower, or you can keep the ticket price same irrespective of the cost and get your 20% growth. They have decided to go for the growth.
Sure.
And then the profitability got shattered for some time. So that's how this thing. But basically, the excellence of the organization, you look at it how much easier it has become for the masses to move from one part of this country to other part of this country.
So your point on Indigo is completely taken. But sir, in PC Jewellers, there were some serious issues which the management did not answer. We missed out.
No. I'm not specifically talking about. So. See, that's a sell side kind of coverage, because the leader, Titan or this thing, your Tanishq, that has been on this thing. So you always look at slightly, because see, in broking, see, this is not the AMC, this
Correct.
is the sell side, the
yeah.
broking side. Now what happens, there are all kinds of clients.
Sure.
All kinds of clients.
Sure.
There is always a buyer and seller, and we are catering to, I mean, we are not asking the customers what is your investment philosophy.
Yeah.
You know, whether you want to buy, see, there are two types of companies, kachra companies and quality companies. So, you know, the point is that customer decides to do whatever they want to do. I might do in quality companies, but the customer wants feedback on a lot of companies which might not be that great.
Okay.
So the sell side
Research is demand driven as well.
it's a demand driven. It's a customer. I mean, you are my client and you say that I'll give you, Raamdeo, I'll give you 100 crore business or 1000 crore business or in this particular segment. Why don't you cover small caps? Now you say that why should you cover in small cap, because there is a pura segment pit gaya hai. So why should you cover mid cap and small cap? You should only do large cap. But I have clients who are basically from small towns and the small pockets, and they want to buy mid and small caps. So should I cover or not cover?
That's the dilemma.
That is the dilemma. And in a stock market, whenever you do these things, there will be some mistakes. See, if you talk about, is there any integrity issue? See,
Sure.
mistake of the call, yes. No questions asked. I mean, whatever we thought is wrong. Okay. But is there integrity issue? Have we done it with a bad
No,
motive or
absolutely
anything?
not. I mean,
yeah,
that's
so
the question.
that is what I am saying. See, you have to differentiate between integrity and the correctness of the call. Correctness, I am not disputing. The market is
It's okay,
arbiter.
it's the game, the nature of the game.
Yeah,
you
nature of the
win some.
game.
Sure.
But there is no integrity issue. It is with the best of the capability and thought process, it has been written and logic has been given.
Sure.
Same is the case with 1%.
1%.
Still, the world has not said what is wrong with that. See, the auditor resigned, but I mean,
It's not come out in black and white exactly
what exactly? I mean, we have differences. I mean, somebody started a rumor. So, like that, I mean, what exactly is the problem? So, we still don't know. I mean, what exactly is the issue? The company is expanding. They have again come out with a quarterly result. So, what I am saying is that yes, market call is wrong. But I mean, and see, even in investing, I can tell you, if we buy, why you need diversification in the portfolio? One of the reasons is that some of the calls will go wrong, and it may not be in your hand. What happens? Some regulatory changes, something is banned overnight. What do you do? Or some Trump tweet comes that he wants to have the Iranian export zero, and oil flares up by $10–20, and that changes the economics of some other business. What do you do with that? Their losses are much bigger than what you do here.
Raamdeo ji, how are you analyzing the landscape of the market right now? We had a 7–8 months correction, which was extremely painful for mid and small, but large caps consolidated or even moved higher. And now, to everyone's surprise, last couple of weeks, we are knocking at all-time highs, and no one has a clue what precisely is fueling that.
See, one of the things is that unprecedented bull run in US, which is mother of all the equity markets, and they are the opinion makers about the valuation of equities and per se sentiment in equity markets. So, so whenever say yesterday market was up, for last 2 days markets were up in US. So today it opens with a gap, and then the local flows they take over. But then you cannot take away what is happening in the US markets and equities. Somehow India has been very sentimentally or sentiment wise connected with the US. You know, so whenever US market goes up, I have generally seen on a day-to-day basis, it does move up in sympathy with that. So that is one of the thing which is happening right now. But EMs are in bad shape right now. Emerging markets are in Turkey, Argentina, and some other countries. They are under stress, and emerging market is not the flavor of the month. And yet India is doing so well.
Yeah.
So I don't have any explanation. In my mind, among the global macros, one of the things which really scares me and I don't understand, and nobody understands for that matter, which is going on for the first time, is unwinding of QE. So when you unwind QE and take the liquidity out of the global system, what happens in their own markets? What correlations break down with emerging market and developed market? What correlations break down between assets? You see, gold went below 1200. So there is some signal that see, gold moved from 400 to 2000 in that liquidity boom.
Sure.
Now from 2000 to already 1200, nobody is noticing. When it goes to 400 again, then people realize something has happened. So, you know, I mean, what all correlations will break, because this is unprecedented. When you wind down, one thing is for sure, QE is not becoming bigger, QE is becoming smaller. Now at what pace and when it will happen, That we have to understand, and we have to be extremely cautious. A lot of things which have happened in last 7-8 years in equity markets also in India will reverse.
All right, Raamdeo ji and Motilal ji, thank you very much for your time on that wonderful note and for patiently answering all the difficult questions which market was wanting to know from you, but I was the medium. And thank you very much and good luck for Aspire as well in coming quarters.
Thank you.